Hey guys, Mubarak here of In Penny Stock, and in this video I want to discuss what are the most popular penny stock trading strategies that you can implement now in 2019. Okay, because the stock market, even though there's a lot of patterns in it that are similar and that can teach you the same concepts over and over, there are specific strategies that are utilized more and are able to provide better returns during certain time frames. And so in this video, I want to cover 4 specific strategies that you can use in order to improve your trading. All right, so let's take a look at the screen, right? This is Finviz. This is, again, a platform that I've been using. Link in the description below. If you want to use it, it's kind of free, essentially, for a lot of the important tools. And the thing I love about Finviz is that it allows me to do research very quickly, and what you need always is a stock screening platform or tool, and Finviz is a good utilization of that. So if you don't know what I'm talking about, definitely check out my free videos below, so that way you can kind of start at the beginning. But in this fashion, in this video, assuming you understand what penny stocks are, I'm going to go over certain strategies. So let's take a look here. This Finviz, of course, today's Sunday. I'm making this video, and so the stock market is closed. And so just a reminder, the stock market is open from Monday to Friday. And so this is showing me information from the close of Friday. All right, so I just wanted to kind of point that out. But you can see here, this one stock went up almost 200%. All right, that's why I love penny stocks, because you're never going to see this type of gain. And this is one day. This is just one day's worth of information and price changes and everything. So in one day, if you were to invest in this, and unfortunately I missed it, but some of my students got into this trade, you were able to about pretty much double or almost triple your money, because 100% change is doubling your money. All right, so 200% change is amazing, right? And let's take a look. Let's pop into this stock. Let's learn a little bit more, and I'll show you how you could have utilized our trading strategies. So this looks intimidating if you're a beginner, but don't worry, okay? Ignore most of it. I'll tell you the only important parts you have to understand, okay? You got your URL. Ignore this. This is a plugin that I'm testing out. It has nothing to do with stock trading. Then you have this platform. Here on the left is the actual stock price history. Now, again, it could look a little intimidating, but these up here will show you different styles that you can have of the stock showing, right? So you can see here, this is a bit more comfortable of a, appearance here. So what you have here, and this one, oh my God, I'm a little pissed that I missed this one, because I'm going to show you why this was such an easy win, right? So first strategy, pump and dumps, okay? You've heard the term, you've heard the phrase. I'm going to go into detail, and this chart right here is a prime example of a pump and dump, okay? And so essentially, let me explain to you how it works, right? This is very specific to penny stocks themselves, because penny stocks are a little different. They don't have the level of regulation that the big, blue chip, and blue chip means like large capital, like the massive companies in the world have. Apple, Facebook, Netflix, Twitter, Google, these companies are required to report their financials on a quarterly basis. And they're supposed to be very transparent with their entire business, right? That's what they release in their 10Q or 10K. Those are special reports that they release either quarterly or annually. And if you've ever looked at a company's annual report, a public company's annual report, they literally give you almost their entire business model. All right, these reports are hundreds of pages long in gross amounts of detail. They tell you the business, the model, who they sell to, the financials, how much money they made, how much money they're losing, the risks, what they're working on. So, and they're required to do that, right? And that's how investors are able to make educated decisions off of those reports. Penny stocks are not like that. Penny stocks do not require any reporting or financials, depending on what stock exchange that they're trading at. And so even though this one is a NASDAQ one, so this one does require it, a lot of the times for penny stocks, or if you see some activity like this, that means it was a pump and dump. And essentially what happens is that Just like how you are probably Googling, what are the best penny stocks to trade, there are actual companies out there that sit in, if you've heard of the concept of a boiler room, or if you've seen the movie Wolf of Wall Street, they're basically they're just marketing, right? They're promoting certain stocks, but it's very systematic. So what they do is they look at certain characteristics of a stock. They'll buy it when it's low. They'll buy it here, and when it was $2.50, right? And what they'll do now is that now I hold it. I'm holding it at 250. I'm going to spend a lot of money, and this group of people that I'm in with, doing the shady stuff with, we're going to spend a lot of money on marketing. Okay, and what that basically means is that I'm going to send out on social media, on email, on mailers, right? I don't know if you get mail to your house about stocks anymore, or if you saw in the movies, that stuff is real. And there's people doing phone calls, that's working out of a boiler room. They're basically trying to get you to buy this stock in whatever fashion possible. And then what happens is that as this shoots up, there's so much marketing, so much hype, fake bubble, that's the pump. That's the rise, right? Now what happens is that those people who set this whole scheme up, they decide to sell, right? Because they just made their profit at 250. Wow, it went up to $5. They're probably selling and selling. Unfortunately, what's happening is that once the insiders sell, that's probably what happened right here at $6. They probably had automated, if you see it touches 6 right there, boom. They probably had automatic trades already put in the system saying that as soon as it hit $6 to sell. And they sold all their shares. And that's why you see this massive dump or decline, right? So this is the pump when the stock is being promoted and going up. And then there's the dump, which is when the price is declining. And that is a key example of how pump and dumps can be used as effective trading methods. And what happens is that if you're able to understand how pump and dumps work, you can actually get involved in the action without being illegal, nothing illegal, right? But this is happening on forums, chat rooms, newsletters, and in penny stock, we teach exactly how you can follow which stocks are being pumped and dumped, right? And you can do it yourself. You can do, all of this is pretty much just looking online, following patterns. All we do at In Penny Stock is save you time, right? That's all it is, and that's what you want to pay for. But you, just as how I was 5 years ago, getting started trading, didn't know anything, was losing money, but the pump and dumps is still a massive way for you to get, for you to be able to profit. Because what you can either do is you can either go long on the rise, right? And when you see a stock being pumped, or you can go short, and that'll be on the other side, on the flip side of it, which is basically you're betting that the stock is going to crash. And it's a bit more risky, only because you can see, if you kind of zoom in to the timing, let me see if I can get to weekly or so, but the crash happened relatively quickly. But yeah, again, this is different intervals of time that you can set for it. But let's go into the recent time frame here, because as I said, I wanted to show you guys why this was such an easy trade and why I'm upset that I missed out on it. And so let's just go, I want to show you how to easily access this stock, boom, right here. And then this is just showing it in a different fashion, same kind of general rules. But what you can see here is that all of a sudden, just in the last, let's see if I can get daily. You can see these are candles, right? So let me see if I can show you a line. You can see just boom right here, it shot up to $5.25 in one day, right? So you're probably wondering how that happened, okay? And now that is how we move on to penny stock trading strategy number 2, which is honestly probably my best strategy ever, and what has allowed students to make 5, 6, 7 figures over the last couple of years, and it was what been my most successful strategy, and I call it the double catalyst rule. Okay, let me break that down. It sounds complicated, but it's actually pretty simple, right? It requires a little bit of understanding, but essentially what my whole argument is, when you get into penny stock trading or stock trading in general, what you'll start to notice is that sometimes the price moves in ways that don't make sense, okay? Sometimes on good news, the price will go down, right? Sometimes, and it just doesn't make sense sometimes. And so the reason for that is because there's a lot of statistics and a lot of behavioral psychology going on with the markets. And that's not something that you necessarily even have to worry about, really what it comes down to is the fact that you want to put the statistics or put the angle of change in your favor, right? So what that means is I have two catalysts. So a catalyst is something that should move the stock, okay? Earnings, right? So when a company tells about how much profit it's made in the month, right? Analysts on Wall Street are sitting and giving a certain projection that this company should hit, and the company also, tells Wall Street that, hey, I estimate that I'm going to hit this number of sales or whatever profits, and then based on if they hit it or not, that'll determine whether there's good news or bad news, right? If you reached or beat expectations, then that should be a catalyst, right? But for some reason, there's times when everything will go right. There'll be a great partnership, great news being alerted, and the stock is going down, right? And that's where a lot of people lose money all the time, right? They think they have this hot tip, the secret of a certain announcement or something that a company is making or a new product, and they go all in, they invest a lot of money, they only did a small level of research, and the stock goes in the opposite direction, right? So the way to prevent that is that you need to, I call it the double catalyst. I combine two different rules in order to, or two different advantages in order to feel like, hey, this was the right action to do. And let me kind of break that out. Now, so a lot of the times what I like to do is I go to Yahoo Finance actually for stock screening. I mean, after I do my initial analysis, if I just want to play around with the stock chart, I end up doing it in Yahoo Finance, just a force of habit, really. It's just a platform that I just am more comfortable or familiar with because I've been using it for half a decade. And so that's what I tend to do. But in general here, let's look at the 5-day. Okay, so that means that, boom, in literally one day, just Friday, first of all, it ended Thursday at 180. And it started Friday at 325. So almost doubled money right away. And what you could have done in the 6 months is you could have set some stats here. You can see that, okay, it hasn't broken 238 in the last month, right? This is called technical analysis, all right? When you're reviewing the price history of a stock, which is what this is showing you here, you are basically trying to understand certain technical, right? That means like looking at the graph, visual, just price history analysis on the stock. So what I believe is that there's a concept known as a breakout, all right? And just stay with me, I know I've said a lot of terms and I'm just dropping a lot of knowledge in this video. So definitely feel free to rewatch it, or, you might need to be a little bit more versed in stock trading before you can fully comprehend this video. But honestly, I'm giving like half a decade's worth of experience and knowledge in this video. So definitely useful to listen up. But what you should see is that there are certain things called a breakout, and essentially what it means is that when something happens in terms of either volume, right, which is shown down here, the amount of shares being traded, or in the actual price of the stock. So if, for example, in this 1 month, right, I see that almost the highest price in the last month was like 277. So a breakout would be any time that the stock broke 277. Within that time frame, right? And so time frames are very particular within trading. It's very difficult to always know which time frame you should look at. And so usually I do the 52-week, and that's why in this one, my technique would have missed this. Now, it's fine. My trades are much safer, but usually I go for the 52-week, or that's equivalent to 1 year. I take a look at that, and I wait for, if a stock is to break a 1-year high, right? So that means, like, look, in the last year, the highest this stock has ever gone to is 1360, sorry, which you can see right here, this black on the right. And so if for whatever reason the stock ever goes that high again, then I feel like that there's a breakout going on. That's what the actual technical term for it is. And that serves as a catalyst. Okay, so the double catalyst rule is combining two forms of catalyst. One is a breakout, which happened here on the monthly scale. And then the second one is news. When you are able to combine a technical breakout with some fundamental news, right? Fundamental analysis has to do with the stock itself. And I'll do a separate video on that actually, breaking down more about fundamental analysis, because it's definitely important for you to know. But when you're doing if you see that there's certain news that comes out, like right here, boom, and actually this is shown better on Finviz. If you scroll down, you can see that after the the stock market closes before this time, right? So at 5:51 p.m. after the stock market closed, this company released news that they're going to acquire another company, right? That's big news. So boom, all of a sudden, you should probably assume that if this happened, I would still keep an eye on the stock. But the second that the stock opened up with this technical breakout in the morning of that, on Friday morning, 3:25, boom, I would have bought it right away, because I just got my fundamental analysis and my technical analysis, double catalyst rule. And I could ride that wave all the way up. So that has been the best strategy for me, right? The first one was pump and dumps, which also this was. And you'll see that pretty much every penny stock you go through has gone through levels of pump and dumps, because unfortunately, humans just try to go after greed and capital and money. And I mean, in some fashion, that's what we're doing in a legal, ethical way, right? But it's going on in the world, so you can piggyback off of it and profit without doing any shady stuff. All right. The second two, the last two strategies that I want to cover is more so just overall strategy for trading. And so the third penny stock strategy I'm going to discuss is position sizing. All right. And position sizing is a very particular tactic that you should implement in every single trade that you do. And very simply put, what it essentially means is that you never risk more than a certain amount of your total capital into a specific stock. Okay, because what happens is you'll never know fully 100% about any stock trade. All right, if you did, you wouldn't watch this video and you would be a millionaire or a billionaire. And even the millionaires and billionaires from stocks still had losses along the way. They just did more wins than losses. So it's not possible, basically, is what I'm trying to say. But if you are able to control the amount that you invest per trade, you'll make sure that you never go fully broke. Right? If you invest 100% of your account, it's very basic. It's common sense, but unfortunately, a lot of people don't implement this tactic, which is, the only way you'll run out of money is if you use all your money, right? So if you have $1,000 or let's say 5,000. No, let me go with the $2,000. Okay, that's more reasonable. $2,000. Okay, that doesn't mean that you have to do your trades while putting $2,000 in every single stock trade. What I would recommend doing in that scenario is never trade more than 25% of your total account per trade. All right. And even that is pretty high. But hey, unfortunately, when you have a lower amount of capital, like 2,000, it's not the largest amount of money to trade stocks with. You have to be a little bit more aggressive with it. And again, there's a lot of preemptive stuff you should do, a lot of research, a lot of studying. There's a lot of free methods online. Check the description below. But in general, you should never put more than 25% of your money in any trade. So even if, God forbid, something happens, you didn't set your stop losses, you didn't implement our tactics, and for whatever reason, you lose all that money, well, it sucks, but hey, listen, you still have $1,500 left in your account. So you can still make that money up in other trades. All right, but if you don't do that, and if you don't do the proper position sizing, that's how you get out of the game. And that's how you lose or fail stock trading. And then finally, most important rule that I talk about almost in every video, most important stock trading strategy is to minimize your losses. Okay? So many times people think that the stock market is some great force of mystery, even though it's just pretty much basic supply and demand. And a lot of the times what might happen is that the stock trade is going in the opposite direction of what you thought. Okay? And you're losing money. And now what you should do right away is sell and cut your losses short. Okay, you lost a few $100, you lost 5%, 10%. That sucks, but that's better than losing even more. All right. Unfortunately, what happens a lot of the time is that people tend to just hope and pray that for some reason this magical algorithm is just going to change and go in their favor, and they don't cut their losses, and they just keep watching as they're losing more and more money. And that's something you have to make sure that you don't do. Okay, the way you stay in the game, just like in every kind of video that I talk about this, is when you are profitable, when a stock is going in your favor, lock in your profits. And the second it's not going in your favor, you got to minimize or control your risk ASAP. Okay, that's how the successful stock traders do it. They don't just hope and pray and wish. Unfortunately, okay, stock doesn't go in your direction, boom, just sell it, right? And you're gonna say, hey, listen, oh, it went down for 5 seconds or 10 minutes and then went back up and I missed it. Well, boo-hoo, if that's not what you calculated and you didn't understand based on the level 2, based on your analysis, based on our trading tactics, if you didn't understand that that is what the stock was going to do, then you shouldn't have invested in the first place. And so you just minimize your losses. That's fine. Don't get greedy. But that's super important to sink in. And this video definitely went on a little longer than I expected, but this is great. I mean, honestly, the content that I covered, you need to understand it. And if you have any questions, I went very detailed and a little bit higher level than usually. In terms of, I brought in a lot of important aspects of stock trading. So if you're a beginner, it might not be something that you're so used to. But yeah, I hope you guys enjoyed this video. If you have any questions, definitely feel free to comment below or email me at admin, ADMIN, at inpennystock.com. And yeah, let me know if you like this video. And if so, I'll make more of these kinds. But I'd love to make content specifically for you guys. So let me know what you're interested in, and I'll see you guys next time. Take care.